now have the pleasure of facilitating one of the conversations and topics that are so near and dear to my heart. And that is the conversation on financial inclusion, a key foundation for sustainable development. Now, before I call on my panelists, I know that throughout the day we have had, and as research clearly demonstrates, that providing people with access to financial tools like saving, credit, and insurance can be a powerful tool for positive change. Now, financial inclusion is one of those things that can directly tackle things like poverty, that can tackle things like giving individuals the power to weather economic storms, can improve the overall well-being of a population, but can also fuel economic growth and enable investment in key activities like education, entrepreneurship, and so much more. Now, today's panel will be helping me to delve deeper into these particular connections. We will explore the effective policies and regulations that have worked for different countries. We will also talk about financial inclusion along with real-world examples of how countries have managed to transform people's lives directly by focusing and prioritizing financial inclusion. To kick off our conversation, I want to start with Cambodia. Now, I know that Cambodia has made significant strides when it comes to financial inclusion. I want to start with understanding and you helping us unpack some of the key policies that were able to lead to achieving this. If you could touch on the measures and the regulatory frameworks that were able to help you achieve that.
For Cambodia, in terms of financial inclusion, what the central bank do in terms of to promote financial inclusion in Cambodia. I think we have, first we have to have a regulatory and framework, law and regulation that governing the service that they offer to the people. And we also develop financial sector development strategy. We develop national financial inclusion strategies. All those law and regulation and policy, and we need to implement it. So how to implement it successfully? We have to buy in all stakeholders because financial inclusion not just the job of the central bank. So the central bank is just facilitate and coordinate with other stakeholders to involve in the implementation of those law and regulation and strategies, financial inclusion strategies. We involve with the Ministry of Women Affairs, we involve with the Ministry of Education, we involve with the other development partner and stakeholders, and we buy in all stakeholders to celebrate. We host a conference, national conference, and also regional conference in the country. This conference, the purpose is public awareness. Because if we have the policy in the paper, the people don't know, so we have to make public awareness. We organize in the capital city, we organize in almost all provinces in Cambodia. We launch especially we conduct public awareness of microfinance operation. This we want people to know the benefit of using a formal financial service, especially offered by bank and microfinance institution. And as previously, Cambodia is, as I mentioned earlier, legacy that we have civil war. At one time, there are no money at all. During 1975 to 1979, there are no money. They are destroyed. There are no circulation of money. So when we liberate the country in 1979, and we start to issue local currency. So it's not an easy to bring the people to use to confident local currency because they prefer to use other currency, especially US dollar. And we also country is very high dollar economies, and on 85% in the economy is dollar. And we got why dollar are used widely in Cambodia. We also got the UN sponsor election in 1993. They spent almost $2 billion in Cambodia, and at that time, dollar widely used in Cambodia. So right now it's still. So the central bank is hard to conduct the monetary policy independently because mostly dollar. So we have limited tool to implement of some monetary policy. But we try our best, and especially during the last 4 or 5 years, we introduced mobile banking and payment services. But right now it's almost in Cambodia, we no need to bring cash. We use QR code to pay. Even I in here, I can use to transfer to payment from here to my country. So it's very convenient in terms of financial inclusion because innovation, technology, and then we have benefit a lot for people. Yes, I can stop here.
Thank you so much. I'll definitely be coming back to you to talk a little bit more and understand more of the things that were done, because like you said, the history of Cambodia is very, very, one that I would actually say is close to the one of Rwanda. I would like to come to you, Mr. Mrenzi, who almost didn't make it to the panel. I'm glad you're here with us. I want to talk about Rwanda because I understand you have been here for a very long time from the beginning. Could you talk to us about some of the strategies that Rwanda employed and used to gain what it has, which has been a steady progress when it comes to financial inclusion? And if you could touch on both the enablers, the key enablers when it comes to the private and the public sector.
To the topic of financial inclusion, I was just reflecting back. It actually became a major issue after the 2008 FinScope survey, for those who might recall. Before then, yes, financial inclusion was an issue, but until you measure where you are at, then you can only be able to know the magnitude of the challenge. So the FinScope 2008 was a revealing survey in that it revealed that over 58 of Rwandan adults were excluded, basically had no access to whatever form of financial services. So leaving only 47% included. And actually most of those who were included at the time were basically informally included using savings groups. So when you spoke of formal inclusion at the time, 2008, that was just about 21% of adults had formal financial inclusion. Now, formal inclusion would include banks, microfinance at the time. There was no MOMO, there was no mobile money. And for banks, it was only 14%, which was about 500,000 adults using financial services, having an account or using financial services. So that was quite a challenge. And as we all know, access to financial services is one of the other necessities of economic well-being. We can equate it to access to education, or even access to drinking water or electricity. And so when you think of it from that perspective, that kind of magnitude of a challenge would not only be tackled by or left to the private sector. And here, I want to say the change that we see after, to a big extent, has been driven by government in partnership with development partners, with the private sector. So where are we now? We actually have the recent survey 2024 but unfortunately the results are not official, so I can't cite them. But I can assure you the results are tremendous, very huge progress. As someone who measures various economic well-being indicators in the country or involved, I would say, Governor, that when it comes to financial inclusion, it's one of those phenomena that has actually progressed so well compared to others, compared to education, access to drinking water, because of the sheer change in just 16 years. But again, I won't cite the 2024, but I will refer you to 2020, which still is very impressive. As I said, 2008 we were just at 47% included. By 2020 we were at 93% financial inclusion, of which 77%, wow. Yeah, it was really a big milestone, of which 77% was formal inclusion, 77 from 21%. That's more than 3 times. And banking, yes, banking had also significant progress from 14 to 36%, moving from about 500,000 to about 3 million adults using banking services. So what happened in between? I think that's your question. There are several interventions. There are really several interventions. So you can see that from 2008, the challenges were due to access of services, awareness of those services, but also limited products. So a number of initiatives had to happen in regard to all those aspects. When we speak of access to the services, it was obvious that banks were mainly in urban areas, Kigali and a few urban centers. So what could be done for banks to reach more places in the country? The government took it on. The government decided to establish Umurenje circles in 2009. That's just after the survey. And Umurenje circles were one of those revolutionary interventions. I don't think anything like that has happened across the world. Maybe Victoria will tell us. But we're talking of having a financial institution in every sector of Rwanda, ensuring that 90% of adults have access within a radius of 5 kilometers. So that was tremendous. That was a government-led initiative to bring services closer to the people. And as we know, with financial inclusion, it starts with that. Let the services come to people. But there were other complementary initiatives beyond that, and the private sector played its role with the regulations, with the guidelines. There was a financial sector development strategy by the Ministry of Finance. There was a fully fledged department that was looking at issues of financial inclusion. It became a development matter. And so with all those combined efforts, we saw, let alone banks also spreading beyond Kigali to other parts of the country, microfinance institutions as well, more savings. But then years after, about 6 years or 8 years, then we saw mobile money come into place. So the 77% formal inclusion was mainly driven by the SACCOs as well as mobile money. As we speak 2024, formal inclusion, you will guess, but it has increased more far. I will leave you to guess that number. But for sure it is not 77%. We're talking of somewhere in the region close to, let me leave it at that. But it's much bigger.
I think I'll speak for the audience.
Yes.
I know that FinScope is coming out in 2 weeks. You can give us something for sure.
I'll leave you looking forward to those numbers because they will be coming soon. But anyhow, mobile money has been one of those key drivers that has led. But aside from SACCOs, aside from mobile money as main ways to facilitate access to savings, to payments, there were very many other complementary initiatives that I think have happened in other countries, but very deliberate in Rwanda. I will say a few of them quickly. The land registry system here in Rwanda is one amazing one, and I don't know colleagues from other countries, in the sense that when you are able to register assets, land, it's one enabler to access credit. But along with that, the ID system. In Rwanda, every adult has a national ID that facilitates opening of accounts, that facilitates payments. Those are key enablers, infrastructures, or initiatives. Then digitization of government services. When you talk of paying for various government services, all of them have to be electronic. So that drives usage of electronic services. Not only mobile money, but as well as banks. Banks have done a tremendous job on that. I'm not forgetting other players, insurance, every other financial service provider has been facilitated in that direction. Then we can talk of the credit information system. We have my colleague here who will talk more on that, but that also unlocks issues of credit. Digitization of government, I say that payment system infrastructure. I think that's a very key one. Right now we're at a stage where we have a national switch which is almost complete in the sense of enabling all intermediation or interoperability, that's the word, interoperability of all financial service providers, including SACCOs, not only banks, mobiles, but all that. So that's the ecosystem that's been progressively been built. And last but not least, financial education, financial literacy. I think we've seen that literacy is not only for the central bank, the financial service providers have also played a role. So Isabel, the journey has been tremendous, enormous, and as I said, for me, it's one of those economic progress that we've seen, or social well-being progress that we've seen compared to other indicators, and credit to all of you.
I want to come to you, Mr. Rajesh. When it comes to your country, to India, what are some of the innovative driving solutions that were perhaps used to drive the financial inclusion that we see today?
I think I need to introduce who we are, because everybody is an established central bank. So Reserve Bank of India Innovation Hub is the startup of the central bank, if I just summarize it before I go ahead. So we are set up 3 years ago to foster, evangelize innovation in the financial sector. Coming to the question, so India has had a very interesting history of financial inclusion, and I've been hearing a lot from, what Rwanda has done. I'd like to add, it gives me a special pleasure to be here, because about 6 years ago, I was in Kigali advising the BNR on payment systems. So it's personally, I'm too happy about it. Yeah. And maybe a small role I have played maybe at some point of time. So coming to India's approach, one of the interesting approaches that we took was, instead of not just policy and regulations supporting financial inclusion by way of agent regulations. In 2010, India set up a digital ID system, which biometric-based digital ID. Now, what is the connection of that to financial inclusion? The point is only 30% of population had a document which was KYC as approved by the central bank. In prior session, there was a lot of discussion on money laundering. If you do not have the foundational layers, then how do you even achieve financial inclusion? So we set up the national ID in 2010, and the interesting thing about the national ID was not national security, but development purpose. And the first big use case was financial inclusion, hence the connection. We said, how do we build a national ID which will enable access and usage for 1 billion Indians? And I mean, give and take 100 million here and there, but today about 1 billion adults. So this is the setup we have. And I would like to take you through what were the key, when we are designing the national ID, how we kept financial inclusion as the core. And then I'll talk about a couple of other things. We designed the national ID to ensure everybody can prove who they are digitally in an online manner by just their ID number. No card, no replacement of card, no issues of lost card, just a 12-digit number by which you can go to any of the agents, give your number, your biometric, and instantly open a bank account. That actually changed the way people were perceiving, because prior to that, you had to take a photograph, fill up a 3-page form, but after that, the only thing they had to do is go to an agent with a small mobile POS, put their ID number, fingerprint, and you are sorted. That is one of the biggest things we did, what we call as eKYC. And today, I think about 14 billion eKYCs have been done. So everybody uses it to get an instant bank account, instant insurance, instant mobile SIM, or instant, stock market this thing. So that was one key foundational layer. The other thing what we did is that we set up an institution called the National Payments Corporation of India. National Payments Corporation of India was set up by the Reserve Bank of India, not owned by the Reserve Bank of India, at the behest of Reserve Bank of India in 2009. What it enabled is, it is owned by initially about 15 banks. Now it is, I think, owned by 50 banks, which set up the country's interoperable payments infrastructure. So that is one of the other things that we did: policy, regulation, institution, and the foundational layer of ID. On that, the last thing I would like to add before, because of paucity of time, is that one of the interesting regulations that India did is interoperable agent network. And for the benefits of governors and DGs present here, it is not defined as, I am an agent and I can work for Tigo and MTN. No. This means the way you and I, Isabella, can go to an ATM and withdraw cash all over the world. In India, today, you can go to any bank agent, which over the decade has grown from 20,000 to 2 million. They are all interoperable, which means anybody can go to any agent and withdraw their money or transact. And stop here.
Thank you so much. Another round of applause for what India has been able to achieve. I'll be coming back to you to talk a little bit more about how you, not just, because it is clear, like you said, with the power of the digital and technological advancement, what has been done. Many countries still struggle when it comes to prioritizing the marginalized populations. But that's something that India has done really well. So I'll be coming back to you to touch on that. But I want to go to credit scoring now. And I know, Naik, you are with TransUnion that plays a critical role when it comes to that. And information, financial information and access to it is also one of the things that are quite critical when it comes to financial inclusion. My question to you today is, how can information or even technology be used responsibly, and that being the key word, responsibly, to create a more inclusive financial system, especially across Africa in particular? And if you could hone in on how that can be done, while preventing financial overextension, particularly when it comes to new entrants to the financial system.
In terms of your question, I think the answer is self-evident already by listening to the colleagues on stage. But I guess a few things that are worth noting in terms of driving financial inclusion. When you think of inclusion, it's those that are physically excluded from participating. By definition from the World Bank or from the IFC, we talk about inclusion is giving a financial product or services, right, to those that can't afford it. It's that savings account, it's that savings wallet that lets you start the journey. And what we found by listening to our board member is that we've made a lot of progress already in Rwanda. We've done that by finding ways to tap into the technology. Probably the biggest advance for accelerating inclusion in Rwanda was the advent of mobile money, allowing us to tap into the telco infrastructure. When I think about the African continent at large, with 515 million mobile unique users, Africa is digital first. We're digital native. In fact, arguably, given our history of colonialism, we've leapfrogged many challenges to jump into a digital first age. Whether it's M-Pesa or Momo or MoCash, these are all ways that we work in Africa by default. We had Bitcoin transactions before they called it Bitcoin in Africa. So that allows us to think differently about inclusion. So a couple of things come to mind for me. And I think, and I'll make the point, Governor, there are things we've done that make Rwanda good, but then greatness awaits. The question is, what's next? So the basics around initial advances was the use of what we call alternative data. This is non-traditional, non-financial data. When you look at the rural populations within countries, even within Rwanda, we understand they don't have the same lifestyle as our urban communities. And what that means practically for us is, can we find net new ways to understand people, consumers and businesses? There's an important point to note that before we had mobile money or we had a telco infrastructure, we weren't as connected to our people. We had to move and come closer to city centers to access both government and private sector services. So the easy, no regret moves was to move into telco infrastructure, to provide connectivity. The second wave, of course, is then to start sharing data. Now we'll talk a lot more about this, but the reality is that when we start to collaborate, we couldn't do this as government by themselves or as a credit reference bureau together with government. The more players realize that financial inclusion is Africa's #1 problem, right? Victoria will tell you that 7 of the 17 SDGs relate to financial inclusion. If we solve this problem, we'll unleash financial inclusion. So I made the point about good to great. What's next? We can see, for example, in Rwanda, we're still using many feature phones. We need to advance to the next phase of smartphones where more of the service delivery can get to the hands of everyday consumers. We need to realize also that as we tap out and get to higher acknowledgement of the full population in Rwanda, the next phase is, are we doing enough for MSMEs? A key point for me that technology is starting to solve. In fact, in my home country, last year for the first time, we were able to score over 60,000 MSMEs for the first time, not through technology, but through thinking differently. MSMEs had created 1 to 2 jobs. These are the guys that will create jobs for the whole continent, not large organizations like banks and telcos. It's the small MSMEs. So the next wave is about how we start to use data, advances in technology, like machine learning, to start to understand the potential in people. We call this starting to purvey hope. What does hope look like? And the reality is that you don't need to go all the way to the extremes of artificial intelligence. There's techniques to use technology hand in glove with humans to start to better understand people. What we want to understand is, I may have been bad yesterday, I'm starting to get good today, and I'll be great tomorrow. If we can start to see the potential in everyday Rwandans, as small farmers, as small business people, we'll start to create jobs and start to accelerate things. And then the final point worth noting, which is a problem across all of Africa, we've got to do more about women empowerment. We're doing really well in Rwanda, but not enough yet. We've got to find a way to fast-track inclusion, and that's a priority for the BNR. What we're working on right now is finding new ways to drive women inclusion, to prioritize this without apologizing that we need to solve women empowerment on the continent. So technology can be used responsibly. I need to talk about overextension for a second. We can look very simply at the example of mobile money. We probably have some 7 million people on mobile money today, and we only have about 3.5 million on the credit bureau. What that means practically is that to access credit bureau infrastructure, which is a traditional mechanism, in my country the bureau started in 1901, but now we need to adopt and have access to technological infrastructure. One of the challenges we find, which is that it's a challenge for every governor in the room, is when you start to overlap what we call a thin file consumer, someone that never had access to credit, and suddenly they want to leapfrog into a bigger personal loan, a bigger loan to extend their house or to get married. We start to realize that it's the same person, not different people. So what we found is when you start to think of Lee Nike or think of Isabel as the one same person and not different people, we start to have a better view of the whole person. We understand your full potential across all aspects of your life. So understanding the full you is a key part to understanding how we prevent overextension and give us responsible lending. Credit is key to the growth of us as individuals, so it's not something we want to hold away from. But the point is that if you balance the guards on overextension with the benefits of technology, then we can accelerate inclusion while being responsible at the same time.
Can you talk to us about some of the things that were done, particularly to drive women financial empowerment here in Rwanda, and some of the things that have been successful that perhaps other countries could learn from Rwanda?
Thank you, Isabel. I'll try to respond to that. But I think when I think of access to financial services for all women, men, I think it sits well with the national agenda of women empowerment. Without that, then these other initiatives, whether access to finance, whether access to education, would be a challenge. So I think the gender gap when it comes to access to financial services has been decreasing. I think by the last FinScope 2020 was about 8% difference between access, formal services between men and women, which is really a big progress moving from 2008. And I think it goes with several initiatives. One is just the realization, especially from the informal financial services, how majority of the people participating in informal financial services in Rwanda were actually women. And that was so meaningful to their households, to their families, in terms of taking care of the basic needs and ensuring progress and access to education for their children. And I think that learning and that demonstration of a woman, a lady who has access to financial services, probably they make better use than us men. That we can all agree, men here, in terms of, especially for the household. So if that's a fact, if that's demonstrated by research, I think it then moves across other services when you talk of formal, whether banks, whether, and the leadership, you know, as of now, as we speak, I think, I'm not sure of my numbers, but most CEOs of banks in Rwanda are women. I think we have some of them here. Yes. But the leadership coming also on top and pushing this agenda and demonstrating the effect it means has also been important. But there have also been guidelines in terms of ensuring or facilitating more access and deliberate products towards women, whether in businesses, small, micro businesses, the ones operating in markets by microfinance institutions. I think combined with all those initiatives, we have seen that that has reduced. But as I started, I think for me, it starts well from the national level, how this issue of equality has been given attention from the top leadership and which has had an impact even when it comes to financial inclusion.
Thank you. Thank you so much for that. Mr. Sonova, I want to come to you and talk about Cambodia and when it comes to the unbanked. This is an area that you've done significantly well. And I want to better understand some of the strategies that you employ to be able to reach those particular populations, especially when it comes to remote areas where majority might not have access to internet.
Thank you, Isabel. Cambodia population is 16.9 million, and there were 11.37 million internet users. So I think this number is quite big, with a total of 22 million cellular mobile connectivity are active. Together with banking system consists of 59 commercial banks and 9 specialized banks, 82 microfinance, of which 4 are deposit-taking institutions, 17 financial lease companies, 34 payment service providers. So according to this number of financial institutions, so Cambodia is easy to access in terms of connectivity, road, easy to access, and every village there have a financial institution over there. So easy for people to access for financial service. And so in terms of financial inclusion, we don't worry about this. People lack access to financial service. But right now we are worried of the usage of financial services. If they have limit knowledge of financial literacy, they may use financial service wrongly, so they will be our indebtedness. So in this, I think is to promote financial inclusion and helping people to use financial service properly is a benefit for them. So I think as Cambodia right now is rolled out of the financial literacy and consumer protection. And this is a key important for Cambodia to enhance financial inclusion.
Thank you. Mr. Rajesh, I want us to shift gears and talk about private public partnerships and their role when it comes to driving financial inclusion. Can you share with us some of the specific examples that have worked and tangible ones that maybe other countries could adopt that have helped when it comes to especially the underserved communities?
Thanks for asking that question. So, some of the narrative that I have seen globally is that the state in India leads everything. So just to clarify, and I'll come with an example, the state does not lead, the state enables by laying the foundation stone or the foundational pillars. So I'll give you an example of instant payment systems, where I mentioned about National Payment Corporation of India, set up by the Reserve Bank of India, that the instant payment system unified payment interface was started in 2016-17. And that is a classic example of the base layer being, kind of owned by semi-state actors. We do 12 billion transactions a month, 12 billion a month, and who is basically, which app do people use? All private sector. So the companies like Amazon Pay, Google Pay, Phone Pay, companies which are all private sector, they account for 98% of all instant payment transactions. Today, if you have a smartphone and you have an account, because as I said, access was enabled a few years back, usage of the account first for payments has become seamless. So we have enabled unified payment interface with private sector. The private sector deploys the acquiring terminals. And the role that the state played was standardizing the QR codes. Again, look at the public-private. Because otherwise, every private player had different QR codes. So if I go to a shop to buy something, I'll have to check what is my wallet, where is my account, and then use it. So the Reserve Bank of India took the initiative of standardizing the QR code. So today, you can go to any place, which is about 50 million outlets, and use this, all led by the private sector initiatives. Yeah, so that's one big example.
Very big example indeed. I want to come to you again, Mr. Morenzi, when it comes to doing the same, really reaching those underserved communities. What are some of the strategies Rwanda has used? I would like to pick your brain on the same.
I'll pick maybe on one recent in the sense of, I think, the last 7 years intervention, reaching the underserved with pension services, as any other countries have mainly been to the formal through the national scheme. But then you talk of that reaching to a small percentage of those working in the formal sector. And so one initiative Rwanda undertook through, again, surveys and showing that there's need for something for those in the informal sector. So the informal pension scheme was an initiative that the government undertook to develop, to bring access to savings, long-term savings to those in the informal sector. Now, that has been rolled out right now, I think in the last 4 years, and is bringing quite a number of people. I don't have the numbers off my head right now, but it's bringing a number of people into saving for long term. And I think such initiatives are a result of government realizing that, again, access to financial services is a basic necessity, as I agree with you, as you said, and so it has to enable that to happen. And so what we are seeing also when it comes to insurance, which has been one of those services, again, just penetration being so low, less than 10%. Again, initiatives happening for micro insurance to those in agriculture, this time more led by the private sector, credit to the insurance companies here, but facilitated by rigorous studies with development partners and the central bank and the Ministry of Finance to unlock the issues thereof and how best to reach those. Microinsurance is now just at the beginning phase in Rwanda, but we see that there are quite promising initiatives to reach those in agriculture, small holder farmers. Those would be the two main interventions, aside from the first one I mentioned of saving through the Umurenje circles, that are happening but are still growing. I think in the next, thinking of where we are headed, I think in the next 10 years we'll be amazed at how access to long-term saving has taken another shape. It's no longer excluded to very few people. Likewise, insurance is no longer excluded to very few people because of such initiatives.
Thank you. I want to come to you, Mr. Naik. When it comes to public-private partnerships, there's so much potential and so much power. But how can that be optimized when it comes to resource allocation? Because the question and the conversation around sustainability is also key, which he briefly touched on.
Thanks, Isabel. That's a good question. I think from my perspective, a couple things need to happen. We need to realize that individually we can do so much, whether we're the central bank or we're the finance ministry or whether we're private sector. The point that you're making or alluding to is that together we can do so much more. I think a couple examples that we've learned is that distribution is key, right? So if you look at the examples from India, from Cambodia, and from Rwanda, distribution is absolutely key. We don't need to do it from scratch. In fact, one of the things that's really prevalent right now is the fact that in my hand, when I hold up my device, I have an access to a world that we can all define together to get it to me. You know, 5 years ago, 10 years ago, that wasn't possible. So the first thing is, you think about resource allocation, there's a point to be made about how we take existing investments and make it available. We coined this term back in 2012 called the sharing economy. Stop making it about me and let's make it about we. So I think that mindset is there. We start and see that in Rwanda, we're working with the BNR and some of its key partners to start to say, okay, we've got these common assets, what do we do with it? And my kind of encouragement to those in the room, whether you're in Rwanda or another country, is what do you have that could have common purpose value? Remember my point about 7 of the 17 SDGs are linked to financial inclusion. So how can we come together? So one example, I think, is distribution and the fact that existing investments been made into this, whether it's fiber in the ground or 5G LTE, to allow us to communicate better and to redefine and reimagine services. That's a really powerful thing. Another key thing, which I think Ivan has already mentioned, is the point on financial literacy. I think that we're in a journey right now where we've done a lot and we're starting to rack up the points in terms of closing the basic rung of the ladder. The next wave is, how do you drive the next wave of education? So getting me access to a few dollars gets me so far. My earlier point, and one of my purposes personally getting up every day, is how do I help create more MSMEs, right? If I think about MSMEs and think about what they need, you know, going as far back as 2018, I remember a study that was done where entrepreneurs were asked, what do you need? Access to finance is one, so this conversation is meant to solve that. But what else? Access to coaching. When we have the money, we don't have the know-how, it's also a problem. We call this concept bridge making, where the large bank goes to the small MSME and says, how can I help? Or the MSME has the great idea, and the bank has the money and the coaching and the business plans. We need to complement each other. That's another good example. And maybe a final example about resource allocation is when I think about what's going on right now, we need to make opportunities available, specifically, once again, to the MSME sector. If you think of the way we traditionally go about our business, the way we've gotten to Rwanda to where it is, we need to be intentionally biased towards certain cohorts of the population. I've already mentioned women, I've now mentioned MSMEs. The next wave is probably agriculture. You know, if you look at India and places in Africa as well, we have the ability to combine the intelligence of technologies, satellite data with bureau data, with loan data, to find a way to get the right amount of money to the right farmer at the right time, and tell him not to plant the wrong seed. That's available today. It isn't a future reality. It's today. The point about public-private partnerships is that if we stop for a second and ask the one question, what could we do together without claiming credit for it by ourselves, and knowing that together we're more than what we can be individually?
Absolutely. Before we go into talking about the future when it comes to financial inclusion and what that could potentially look like, I want to first of all come back to you, Mr. Mrezi, and talk about how something that can potentially revolutionize access to finance, and that is fintech. This is an area that you have done well, as we have done well as Rwanda, but also the National Bank of Rwanda, the central bank. I want to understand what was done in terms of making sure that an environment is created that can facilitate that kind of innovation in order to expand this financial inclusion.
Yeah, I think in simplicity, when you refer to fintechs, for me, it's saying how can technology bring more channels, facilitate easy access to services, or even products, harness data to create new products, all that together. And I think this is an evolving area. If we look back about maybe 7-8 years ago, we had agency banking for starters as a complement to traditional branches. That has served its purpose. And I would say in general the central bank has been open and responsive to see all these relevant initiatives, technology plus others, and how they can complement traditional services that exist. So I went back to that point because that was a learning moment in terms of how does the central bank respond, and the central bank did respond with the relevant regulation to facilitate registering of agents, whether banks or insurance or Momo. We're talking of over 150,000 agents across the country in addition to existing branches. And that's enabling easier reach and usage of financial services, whether in terms of withdrawal or deposits. Now, mobile money comes. I think the central bank was also responsive in putting in place regulation for non-bank e-money issuers, allowing now mobile service providers to be able to take deposits, issue credit, and other services which are still growing. So here we are seeing the central bank being responsive. I think that's the word. Being responsive to see how the idea or the service is complementing or is actually addressing a gap. We've moved now to a phase of regulatory sandbox where the central bank has, I think as of now, given, allowed 6 companies, private companies, to be able to set up in this regulator sandbox, to innovate and try different products which are not existent in terms of other service providers. This is what we need to see. But in allowing all that happen, I think the central bank also is cautious to ensure things like data privacy. And in Rwanda, we are blessed to have the data privacy law enacted in 2020, ensure that the data that these companies, first of all, they have access to the data, yes, but they use it in a responsible way. That's very important as well, because as much as we want to see technology and innovation progress, we want it also to happen in a more sustainable way, and be able to manage the risk. But in conjunction with that, also consumer education and consumer protection. There have been initiatives. There's now a unit in the central bank that takes care of these matters, brings awareness to the risks of consumers. And I think this is still a work in progress. And again, credit to the management in how they have been responsive. The central bank has been able to attract quite competent people from the private sector. We recently had someone recruited as our director of payments from one of the major telecom companies, someone who is relatable to the service providers. And I think adapting, being responsive has been the journey so far, and I think it continues.
The biggest trends that are likely to shape the future of financial inclusion, and how we can best prepare for that, how we can ensure that we are adaptive and we are able to counter or thrive in the new environment.
Thanks. So one important element of the future of financial inclusion is, for now, we've always focused on supply side. This is what I offer to the consumer, take it or leave it. The time has come that consumers need tailored products, hyper-personalized products, whether it is a savings product, a credit product, or even a payments product. They need what they want, where they want, how they want, as they do in music apps. Ask Gen Z. He alluded to gender intentional products. Unfortunately, most of the countries around the world, most of the financial institutions do not think there is a need to have gender intentional products. So what we mean is, this is what is going to shape the future of finance, that in this decade, consumers would want to ensure that they get the product they want. And for that, regulation has to be agile and technology has to be used, not necessarily AI, ML. There is a lot that can be used, and I can't end this thing without talking about one specific example. One of the reasons we are here, we're working with BNR. So one of the things we observed in India, that there are 120 million small farmers. Well, I've heard about farmers and credit being a challenge in some of the countries. We mapped out the process and we realized, despite digitization, and I'm talking about Lee and our gentleman said, despite digitization in India, it takes for a farmer 4 to 6 weeks, which I'm sure is not very surprising to most of the people sitting here. 4 to 6 weeks, 5 visits to a bank branch. So we said the future, again the example, we said why don't we leverage data element that exists, financial, non-financial, we are all going digital. Land records, national ID, everything is going digital in Rwanda or Kenya or India. So we then reinvented this entire journey and have started, with partnership with 9 banks, a loan which is given through a straight-through process in less than 5 minutes. So I want to tell you, this is what the consumer, the farmers were so shocked that I could get money in my bank account in less than 5 minutes.
In the interest of time, we're not going to have closing remarks from everybody, but I would like to come to the Deputy Governor of the National Bank of Cambodia, Central Bank of Cambodia, to just be on statistics. Real quick, I think we have maybe about 60 seconds. I can see the MC walk to me and remind me the clock is out, but just in a nutshell, the one thing that has stood out for you in terms of what Cambodia has been able to achieve that you think could potentially shape or become that tool that other countries could use to achieve what you've been able to achieve, beg your pardon, in just a couple of seconds. The one thing that stands out from everything that Cambodia has done to achieve the financial inclusion that you have, that you want to live with us, and that other countries could borrow and perhaps achieve the same from?
I think one thing that we introduce is the barcode payment. This is they use blockchain technology, and this one is increased very fast in terms of outreach to the population, outreach to people in terms of access to finance, access to use financial service. So in this barcode payment system is very convenient and provide the platform for people to transact in terms of settlement good, and also in terms of payment in QR, because we have standardized QR code. So in terms of bank connectivity is no problem. Right now it's very easy, and we can transact in terms of QR connectivity with the neighboring country. Right now we connect QR code with Thailand, Vietnam, and Laos, and Malaysia. We are on discussion, and the other country too, like China, India, to introduce this cross-border payment. So I think it's
definitely something other countries can learn from. Thank you so much. Just one final contribution from you, Mr. Rajesh. The one thing that you are so proud of that India has sort of used as a fuel for this financial inclusion that you have achieved, that other countries can learn from, that you want to leave us with in just 10 seconds, if you can.
So if you're talking about one thing that India has done, yeah, so honestly, last 3 years that the Reserve Bank of India set up the Reserve Bank Innovation Hub, whose day job, night job, is only to focus on customer, technology and innovation. I'll stop there.
Thank you. And with that, I want to once again thank my esteemed panelists who've been so patient. I know we went a little over time. We appreciate your time. And that is the Deputy Governor of the National Bank of Cambodia. Thank you so much. The Chief Executive Officer of TransUnion Africa, the Deputy Governor, the Deputy General of the National Institute of Statistics of Rwanda, also a board member for BNR, and last but definitely not least, the CEO of Reserve Bank of India and Innovation Hub. Thank you so much for taking the time to be here and for allowing us to learn from your experience. We appreciate that. And to the lovely audience that is still standing strong to the very end of our celebrations today, thank you for being patient and for the contribution during our session. And I want to end by saying a big congratulations to the National Bank of Rwanda. 60 years is a big milestone. So let us appreciate the good work that has led us to this point and the great leadership represented also here in the room that has been at the forefront of that. Thank you so much and a good rest of your evening.